Okay, so Japan, so there was this thing going on, and it's a big deal, right? So it's called the carry trade or the unwinding of the carry trade. So in Japan, their central bank, the Bank of Japan, did something that our central bank has vowed that they would only do as a last resort, and they made negative interest rates. Our central bank went as far as finding a different mechanism, this whole thing called quantitative easing and quantitative tightening that we're talking about to help control our piece of the puzzle, our economy. But a lot of central banks do this thing called negative interest rates. If you can believe it, in those countries, they want you to use your money so badly that if you wanted to save your money in a bank, you would have to pay the bank instead of the bank paying you, right? Because when there's positive interest rates, that means that you could put your money into a risk-free place like a bank, and the bank would pay you some sort of interest every year for you storing their money there. But when an economy decides to use negative interest rates, if you wanted to save your money, you'd actually have to pay the bank to store your money. What does that mean? It also means that banks were trying to get people to spend their money so much so that they were making it really inexpensive to borrow money. Like money was basically free to use and borrow with collateral. So here's what people were doing. They were going over to Japan, borrowing all this free money, this low interest money, and even paying the conversion to US dollars, and then coming back and buying things like Nvidia, things like Apple, things like Microsoft. In other words, they were playing the spread game. They were using the Bank of Japan's money and buying assets here that up until recently seemed like they were good deals, like there was no way you could go wrong. And so you were getting all this free money, buying these assets, and then keeping all the gains that you make, as you return that money. Well, as you know, a lot of that has been unwinding. And the Bank of Japan also said, hey, we might start raising interest rates. Might start making it more expensive to borrow money. They have pledged later in the week to kind of hold off on that. But in the beginning of the week, they were like, hey, we're going to start raising interest rates and not making our money so free. So the combination of these big flying stocks that people were investing starting to actually sell off and not have as good a gains as they thought, and the combination that the Bank of Japan's money was not going to be free anymore, people started to unwind all of this. And of course, that made Japan sink. It made more of the trades here sink. It just creates this snowball effect. And that's what happened in the beginning of the week.